About 75% of global GDP does not come from the US. So I think it's very important that you want to access sort of great minds, technology, innovation, not to mention growth rates and demographics and other things in other countries. We're looking for growth that is sustainable, that's long-term, that can grow above the markets for long periods of time. So one of the things that's always interesting about international is you can avail yourself of different growth rates relative to the US market, and that's something that's obviously attractive. Growth companies, by definition, generally grow their earnings. The issue with growth is that when growth companies invest for growth, earnings can go sideways or they can go down. If the market is not prepared for that, those stocks can become very volatile. So we always try to understand our companies, where they are in their capital spending trajectory, in their growth trajectory, and make adjustments around that. We believe that growth is not one size fits all. There are different types of growth companies. We call them emerging, secular, and structural. Each of them have different growth rates. They have different drivers of growth. Emerging growth companies tend to be more about top-line growth rather than bottom-line growth. So we have a mix of different type of growth companies in the portfolio. Emerging growth companies are the riskiest part of the portfolio, always, and those can be small caps. They can also be large caps as well. And we want to ensure that they don't provide too much volatility in the portfolio, so we size our individual positions for risk. We size that individual grouping for risk. So within our emerging group, we have up to 20% in that particular portfolio. What provides portfolio stability is our secular compounders. These are larger cap stocks with established management teams that are very good at growing top line, also very good at generating synergies in the bottom line. So they grow above the market for long periods of time. And then we have structural change stories where we see future growth, the market doesn't see it. They're inexpensive companies, they have very good earnings growth, and they might not have a lot of top line growth. So there's a number of different ways that we sort of put that together. And then we try to find them either in the small cap names, mid cap names, large cap names, wherever we think the valuations are most appropriate. So we can move around and we try to avoid, obviously, the stocks that we think are overpriced. We don't want to just be in one particular sector, one particular region, and we don't try to predict whether that will be successful or not. So we want to find as many growth opportunities in as many sectors as possible. So that's number one. We're overweight a few key sectors. Technology is an example of that. So we think there are a lot of opportunities in the international marketplace. We think currencies can be better performers perhaps next year, and we think the valuations generally around the world are quite cheap. We think Europe is still inexpensive. It trades around a 17% discount relative to peak earnings. Valuations are attractive. We think that the performance of international markets has been not flattered by the currency behavior. Japan is a market where ROE has gone from 4% in 2012 to just under 10% today, and we think it can go to 12. So that is a really good backdrop for earnings growth. And then, of course, there's the self-help stories where these companies will grow beyond that. So that's just the marketplace overall. Japan is interesting because you have companies there that are very unique. They are heritage companies, specifically in the cosmetics industry. The cosmetics industry is a very interesting industry. It grows at very high margin, and it grows for 25 years at rates that grow above the market. So we have these very profitable businesses that grow for long periods of time. They generate a lot of cash, and they do it for very long periods of time, meaning that their value accretes in a very interesting way. So what we like about, let's say, with cosmetics in Japan, and specifically skincare and skincare regimens are something that is very endemic to Asia, and certainly Japan is part of that. So very high quality products with very high margins. Those are the sort of things that grow for a long period of time. The Japanese are very used to that. Now, that has translated into advantages in other markets that are growing as well, specifically in China, where they too value the Japanese reputation for brand, for quality, for product, and efficacy. So those are the sort of things that translate beyond sort of the original local business very well into the international marketplace and really do help them grow as well.